Well, hello everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and back with me today is Patrick Hawe. Patrick is a professional trader at T3 Trading Group and one of the moderators in T3 Live's virtual trading floor. Thanks so much for joining us today, Patrick. Uh,
Thanks for having me
we,
back. Great to be here.
yeah. All right. So, my first question of the day today is the same as it's been in the past few events. How would you grade your week of trading so far?
Yeah, sure. Love the question. I would say I trade it. I gave myself a B plus. So the month of March was pretty good for me. I had a pretty good month of March, and normal traders will tell you it's very often that after you have like a good run, that you tend to give some back, and newer traders tend to almost have like their worst days after their best days. So after you
Mhm.
have a good run, I usually try to get in defensive mode because I know that that can happen, right? You start to get a little bit looser. You build like a P&L base, so you start to say, okay, well, I'll risk a little bit more because I built this P&L base, and you're
Mhm.
also usually chasing a market that's had a good move up. So I went
Right.
a little bit more defensive, but still was a little bit looser. Ended up losing a little bit last Friday in shorts when everyone knows market just went crazy last Friday. Just pretty much everything
Mhm.
squeezed.
Mhm.
But then I give myself a B plus because I was able to bounce back mentally, give a little bit of money back. That's fine. The next day, there's always more opportunities.
Mhm.
If you've been trading long enough, you know there's just infinite opportunities always. So just move on to the next one, and bounce back fine. So B plus, not perfect, but not
Yeah.
bad either.
Solid passing grade there. All right. For everyone that is joining us live, if you've been here before, you know this. If you're new to this event, thanks so much for joining. You the comp the chat. Sorry, everyone. The chat is open for questions and answers throughout this event. So I'm going to chat here a little bit with Patrick about the questions I've come up with for today for our conversation. But then please submit your questions in the chat, and we will get to those in the second half of this event. He'll be answering what you actually want to know. So go ahead and start submitting those as he's talking. If anything comes up and you want to follow up on that, throw it in the chat. I will make sure to get to all of them by the end of this event. Okay, Pat. So the second quarter officially kicked off this week, Monday. Q1 technically began Saturday, but on Wall Street, it was on Monday. Talk about your strategy for this new quarter of trade following Q1.
Yeah, so I would say strategy honestly pretty similar to Q1, and that's because Q1 was more or less a pretty choppy, but
Mm-hmm.
overall flat. Maybe we were up, maybe we were down a little, but I'd say it was overall flat for the most part. I guess we ended pretty well. Again, last Friday, big short squeeze, marking up for quarter one end. Um, but for the most part, we didn't really have any. Not we didn't have a big low. We didn't have a big high really come in either. So for Q1, it was really just about focusing on relative strength and relative weakness. That was really everything. Whether it was the tech relative strength and then the bank, IWM, Russell 2000, what relative weakness.
Mm-hmm.
And sometimes it's even very specific where it's not just like tech and energy, but it's, Amazon is strong today in tech land and Google's really weak for some reason. And then by lunchtime, Google is really strong and, Amazon's really weak out of nowhere. So paying attention to relative strength and relative weakness and staying tactical. Um, again, choppy markets, rangy markets, they go down when things look perfect. They go up when everything looks terrible. And yeah, just still paying attention to the data. Obviously, we have the whole inflation battle and the
Yep.
Fed funds rate, everything like that coming out, which I'm sure you're going to be asking about. So don't want
Yeah.
to get too much into it now. But yeah, so just staying tactical, relative strength and relative weakness, keep following that. And yeah, not really going for any huge moves. I'm not loading up a long portfolio. I'm not loading up a short portfolio. I'm kind of in and out and sticking with that for now.
Just for the audience to understand, talk a little bit about your personal trading style. Are you a swing trader? Are you a day trader? What are you doing day in and day out for yourself?
Yeah, definitely both. I wouldn't label myself as either really. I just
Okay.
try to make as much money as I can for as little risk as possible. Obviously, easier
Mm-hmm.
said than done. But so like in the environment that we're in right now, which we've been in for a while, it's kind of been all over the place, and I find it easier to, again, kind of be in and out. If the market gets really extended one way, which it did a couple weeks ago with the SVB thing, then I'll start to really lean in long and look for that snapback. And then just this past week, starting on Friday, which I got burned a little bit, but then made it up this week, market got really kind of extreme to the upside, especially with tech. It was just buying, 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 buying. So we actually started to lean a little bit to the short side. That pulled in. I'm kind of easing back out. So that's just the environment we're in right now. Before COVID, when it was just pretty much everything was perfect, I would have 10 long positions on at a time, just because it was more of like an uptrending market. This market's not in a trend, hasn't been in a trend since like January, really.
Yeah.
We made the October low, we rallied from January. So we broke the downtrend, but then as of recently, we've also kind of broken that uptrend from the lows. So right now, I just follow the market really. It's a trendless market, so I'd always rather miss a move than lose money on a move. So I'm fine with being light and missing some moves, because honestly, it saved me probably a lot of money and headache over like the bear market last year.
Yeah, totally.
So yeah,
sorry. So as we're starting this new quarter of trade, we're almost a week in here. Tomorrow is technically the last day of this trading week. A reminder for everyone that the market is closed on Friday, and we'll talk a little bit about that later. But are you personally bullish or bearish on stocks this quarter, on the backdrop of everyone kind of warning that we're approaching a recession probably in the third quarter?
Yeah, so it's been weird, it's been tricky, obviously. I'm very neutral. I know that doesn't really help it. I'd love to say, oh, I'm super bullish, everyone buy, or I'm super bearish, everyone short. But I'm very neutral, and that's just because that's what the market's been telling us, right? It's a trendless market. It's this battle between, everyone knows how important the Fed is now after what happened with COVID. So everyone's trying to get ahead of the Fed, but usually when things work on Wall Street start to go Main Street, those trades don't really work as well anymore. So it seems like we're having this weird battle where everyone's trying to get ahead of the Fed. We're pricing in 2 to 3 rate cuts by the end of the year, which I think is kind of crazy. I don't really know why. But that's just kind of people trying to get ahead of the Fed. And because of that, market keeps getting bid up and bid up and bid up. At the same time, inflation's not going down. The Fed has made it very clear that we need to get inflation down. It's better to have short-term pain than, hyperinflation for years and years out, right? So it keeps being this battle where like the market's trying to predict the low and get ahead of the low before the low happens, whether or not that low is in October. But even if that low was in October, the inflation, the deteriorating economic data keeps a bit of a ceiling on the market. And that's just kind of what I think is going on. And so far, that's kind of been the case where this market's really trendless. It'll look really good and then stall out. It'll look really bad. And, maybe we're going to test October lows and then things seem to resolve themselves. So, yeah, very neutral and waiting for clarity. Again, it's better to miss the beginning and capture the middle than be wrong, too early, too late, something like that. So,
yeah, totally. You mentioned the economic data, and today we got our biggest piece of economic data so far this week. Yesterday we had JOLTS, job openings dropping below 10 million for the first time since I think it was May of 2021. Now my number is going to leave my brain, but 2021. So it's been a long time. Then today we get the private payroll report from ADP coming in way lower than expected. Stocks though falling. The Dow up, the S&P though, the market overall down today on that number, that 145,000 jobs added in the private sector last month, which was below expectations for 200 or down from 261,000 in February. Explain that down reaction from the market. We've been in this, bad news is good news kind of environment for so long. Do you think that's over?
Right. Yeah. It's a good question. And it goes back to kind of just, again, this whole theme I'm trying to say with this battle of people. It's almost like a battle of just people trying to get ahead of another, and everyone's kind of stepping on each other's toes in a way.
Mm-hmm.
So for a while, inflation was the theme. We moved a bit past that. We moved past that a few months ago, honestly, but at the same time, inflation's not, it didn't whatever V top and it's not going straight down either. It's still 6% or whatever the last CPI print was. Powell needs to get that down to 2%. Um, so at the same time, so again, like Fed funds rates, we're predicting cuts, markets getting bid up on that, tech's getting bid up on that. At the same time, now you're seeing this data start to come down. The economic activity really is starting to slow down. So now maybe we're not going to get the Goldilocks scenario. Maybe now we're not going to get this perfect soft landing. And then you have to keep in mind too, like as it matters where you're going to go in the market, but it matters where you're coming from too. So when you're in a
Mm-hmm.
range, that's when you bounce from the bottom of the range to the top of the range, and then it looks like you're going to break out, and then you fail, and then vice versa, it looks like you're going to break down, fail. So like
Mm-hmm.
this past data that we just had a pretty big month of March. We had a pretty big move, especially into the end of the quarter. So, is bad news good news? Well, yes, it's good news for inflation, but maybe we're also
Mm-hmm.
moving past that. So it's also bad news for the economy. So it's like people are
Mm-hmm.
kind of tripping over themselves a little bit. And then on top of that, again, we've just had a pretty good month. We've had a good move up. So that's a sign of price action where if data comes out and the market's supposed to do something, everything lines up, and then the market doesn't do that, that can be a sign for
Mm-hmm.
the other way. And that's
Yeah.
just following price action, which there's no like perfect definition for following price action, but that's a
Mm-hmm.
good way to put it. When something like what you're doing, you have a good thesis, everything's supposed to happen, and then it doesn't. Market should definitely go higher on this news, and it doesn't. It can be a sign
Mm-hmm.
for the other way. And part of
Yeah.
that, again, had a really good month. Everyone's kind of loaded up, so you run into selling there. So,
Yeah. And I
or
think,
maybe not even selling, but just like you don't have enough buying to keep it going, right?
right,
And then
right.
you start to roll over that leads
Mm-hmm.
spill over.
And I think you made a good point there with the whole Goldilocks. We're not going to, I don't, most would say we're not going to get that Goldilocks situation that the Fed was hoping for, that soft landing, not too much impact on the labor market, even though we could get inflation down. It seems like at this point we are going to have to see a pretty deep recession, at least a short but deep recession for the US economy to actually have an impact on the inflation numbers that we're seeing. So this week, I mentioned this earlier, but we have a bit of a unique situation. The official jobs report comes out on Friday, and Friday morning, as usual, but the stock market is closed. Now, this doesn't usually happen. We're closed on Friday in observance of Good Friday on Wall Street. Usually this happens a little later in the month, so you get that jobs number on that first Friday, and then maybe Good Friday is the second or the third Friday. But this time they align. So, how are you as a trader approaching that data since you can't actually trade any reaction to it on Friday? And do you expect to see a delayed reaction on Monday?
Yeah, so I'm approaching. It's definitely interesting because it's such a big number and the market's closed. I'm approaching it the
Mm-hmm.
same way I would approach a CPI number, as if I'm getting ready to trade at 8:31 in the morning when CPI is
Uh-huh.
released at 8:30. And I say that because nowadays when economic numbers are released, just algos react to it so fast that you're never, at least I'm not, and I am pretty fast, and you're never going to be able to like catch that number and buy if the market's shooting up. So usually
Yeah.
what we do when we approach these numbers, and I think Derek went over this last time he was on this show and you were talking about it,
Mm-hmm.
the whatever sharecast. I forget what you guys called it last time you came up
I
for
think
a
he
word.
named it a streamcast, was
Right,
Derek's
stream. Yes,
decision.
yes.
Yeah.
So we figure out what the market is pricing in the move to be based on the event. The way we do that is simply by finding out what the options market is pricing in. You do that
Mm-hmm.
by you get the closest strike price to wherever the market's trading. You add the call and the put of that strike together. And that's basically what option market makers are pricing. And that's basically, if you buy that call and that put, the market has to move higher than that range. You add those two together, you get that total number. The market has to move
Mm-hmm.
higher for that strategy to make money. And option, market makers, like the gods of the market or whatever, they don't want you to make money. They want to make the money.
Mm-hmm.
So it's very often that those moves are contained in those levels. So if it was, say the market was open, I'd be doing the same thing. I'd be finding that range for what, if this is like really bad or really good, what's realistically the most this can probably go up or down on at least the
Mm-hmm.
first reaction. And then I'll, again, kind of find barriers around that. So if I want to short, if it's pricing in 10, I'll look to start shorting 9, 8, 9, 10 up. If it's priced, and start buying 8, 9, 10 down. So again, because of that fast reaction, I probably wouldn't be reacting if the market was open anyway. I'd be reacting after. So I'm just going to do that exact same thing as if it was 8:31, but then just assess the gap on Monday.
Okay.
Because again, we'll see. So tomorrow afternoon, Thursday afternoon, I'll see what the market is priced in for the S&P for Monday by Monday's close. And no matter what the number is, it's probably unlikely it's going to gap way up or way below that expected range.
Yeah.
So that's what I'll be doing.
Great. Okay. So as we've talked about, this cooler labor market data is what the Fed wants, to help with the inflation picture. And as you've mentioned, CME Group's FedWatch tool still shows that traders are pretty split on the May 3rd meeting and what the Fed might do, leaning though toward a pause in rate hikes on May 3rd. What are your expectations for that next Fed meeting? We're still, a month away, and why?
Yeah, I think Powell's going to hike by 25. I think he's going to hike by 25 because inflation's not at 2%, and he is going to do everything he can to get inflation to 2%. He's been extremely clear on that. It blows my mind what the Fed futures have been doing this year. And this year is the first time I can remember in a while that the Fed futures got it wrong and the Fed had it right. And it was earlier, but then that flipped a little when SVB happened. But I'm pretty sure it was before SVB. I forget what number. It was a CPI number. We had a Fed meeting and Powell basically stayed hawkish. People were looking for a pivot. I think it was the March meeting.
And
And
you
then
told
Fed
Congress
futures,
basically left the door open for another 50 instead of 25.
Right,
Yeah.
exactly.
Right.
So Fed futures were already pricing in like 2 cuts or something then. We're pricing 5% peak then. Then we moved up to 5.5%, and that's what Powell and all the other Fed members have been saying. So we're back to this scenario. We're back to that scenario again. SVB kind of messed everything up real quick, right? And that's still maybe going on. That's not completely over yet, per se. I don't know. Maybe it is, maybe it isn't. But so we're back to that scenario where now the Fed futures, as of now, they're pricing 50-50. This maybe one more hike, maybe that's it. But they're also pricing peak future, or they're pricing the year-end rate to be, I have a quote, 4.15% by the end of the year, which is indicating 3 to 4 rate cuts. So I just don't see Powell cutting rates right away after raising them unless something bad happens. The market is not trading like something's bad is going to happen, right?
Right.
Like,
I was going to say that would be an indicator that the market is expecting some really deep, terrible recession to happen really, really quickly, and then have to do these emergency cuts.
Right. And like an example to go back to, if anyone was trading in 2018 and you remember the end of the year in 2018, the market basically went straight down December 2018, and then Powell pivoted. That was the Christmas bottom. I think futures bottomed on Christmas Eve, literally, or maybe even Christmas Day. But that December 2018, if you look at the chart, the market went straight down like every single day. And that was basically the market telling the Fed, like, stop hiking, cut, not even stop hiking, but cut. Like, we need a cut. You're doing this too much too fast. We need it. And that was the market telling the Fed what it wants to do. And the market's not doing that at all. I mean, the market looks more bullish than bearish right now. So it's this weird scenario where like the market looks good. It looks like it. Oops, I just dropped my mic. Sorry.
No worries.
Anyway, the market looks good. It looks like it could keep running. At the same time, they're pricing in 3 to 4 cuts by the end of the year. At the same time, inflation is not close to 2%, and the Fed is saying we need to get inflation to 2%. So it's these fighting forces, and I think the Fed will win after all. I don't see how it's like mathematically possible to get S&P all-time highs, 2 to 3 rate cuts at the same time, and inflation, 2% inflation. Like, I just don't really see how that's possible. So my expectations are another hike. Maybe he has some more dovish language, but I think it's much more important for them to get inflation down than to just have it. up here.
Yeah.
So that's my expectations. He's not gonna back off, definitely.
Yeah.
And if
And as
anything,
I
again,
talked,
that off too.
no,
Sorry, not to cut you off,
no, you're okay.
but the SVB thing, like that was another. That's the second example I can think of this year. The first one was the Bank of England when their gilts
Mm-hmm.
went crazy, and that was this. And the Bank of England stepped in then, and then we just stepped in with the SVB thing. And this is like the second thing this year I can think of where the Fed almost needs something to break, and then we almost just had two big breaks, but we
Mm-hmm.
stepped in and stopped it.
Yeah.
So that's just another, like we keep stepping in
Right.
and
Mm-hmm.
stopping things, but
Mm-hmm.
then you see inflation's not really coming down too fast yet. So
Right.
yeah, it's
Powell
interesting.
mentioned this during his press conference from the last Fed decision. He talked about how credit is expected to tighten around the country, and that will be disinflationary, and that will help the inflation picture. Of course, it will. You make money harder to get. People will spend less money. There will be lower demand. So that's of course helpful toward the inflationary picture for the Fed. For something like the banking crisis that just happened, for that to happen, it helps them almost on the inflation. Do you think that takes a little bit of pressure off the Fed to say, okay, we can do one more 25 basis point hike and then we can just kind of pause and not have to go as high as we were planning to before?
Yeah, I that makes total sense to me. I just don't get
Mm-hmm.
why we're pricing in the 2 to 3
Yeah,
cuts,
the cuts.
and the market is also seems to be trading off that information as well.
Mm-hmm.
So like what I totally agree with you just said. It makes total sense to me, and
Mm-hmm.
I don't. If the Fed, like if they do say, hike one more, even if they don't hike one more, but they're not gonna just shoot it right back down either. I don't see the S&P holding up perfectly if the Fed funds futures have to adjust that back again and they get it wrong again, and we're
Yeah.
not going to get 2 to 3 cuts this year. I don't see 2 to 3 cuts with markets holding up as well as they are. It just doesn't really make sense. But I guess
Yeah.
we'll see what happens.
We'll see. So ahead of the jobs data on Friday, we're going to hear from St. Louis Fed President James Bullard tomorrow. Bullard has been he's the quintessential hawk on the Fed. He's probably your most hawkish Fed official. He continues to, when they started all of this, he was talking about we need, two, basically 1.5 just at one time,
Mm-hmm.
all of that. He's not a voting member of the FOMC this year, so his opinion is a little bit not as impactful, I guess, as you would say, as a voting member of the committee this year, but they still all talk. What do you think the market reaction might be tomorrow to his speech, as if you expect him to continue to strike that really hawkish tone that he's been having throughout all of this?
Yeah, the market, I want to say it was before the October low and maybe a little bit
Mm-hmm.
after, used to move a lot more on the Fed speak headlines.
Yeah.
Like every time whoever Bullard or Kashgar or whoever says anything, you get like the algo instant reaction in the market. And
Mm-hmm.
they don't seem to be having the same reactions now.
Mm-hmm.
And partially, again, that's because the market is almost calling BS once again on the Fed with, they're saying 50-50, probably not even getting another hike in 2 to 3 cuts
Mm-hmm.
by the end of the year, where,
Right.
again, all these good guys are saying we need to take care of inflation. So honestly, we'll see what he says, but for the most part, these Fed headlines have been reacting with if it's something extreme and we get one little extreme move, it's quickly negated. So we'll see what he says, but I'm not really too worried about it. I guess
All right.
not that I don't care, but like we
Yeah.
just haven't been moving as much on Fed speak lately because of just what
Right.
the market's not listening to them. So
Right. The market's basically like, we don't care what you have to say. This is what we think is going to happen. We're not
right,
listening.
exactly, right.
Yeah. Okay. So let's talk a little bit more about you. Derek hyped you up last week as the research powerhouse that he and other traders who are in the ProDesk ETF rely on. And I've been in the ProDesk ETF. You're in there posting news all day long. Headlines, 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 headlines as they come out. You do a really good research note in the morning. Take us through your daily research routine, what you use to find those stories, what you determine to be important, why you determine it to be important, etc.
Sure. Good question. And yeah, shout out to Derek for the shout out. So shout out back.
Mm-hmm.
So yeah, I guess my routine is I wake up and I start reading, and then I read some more, and I read more and more and more. I read a
Mm-hmm.
lot every morning. What I So I guess that's like partially what I try to do for the protest group is be a noise filter. Because if you've ever had like a real news, like a news stream, there's so much
Yeah.
noise in it. It's just a bunch of stuff, and you'll almost like get blinded by it, but then you'll miss that one headline that matters out of the the one out of the 50 that you should have traded, that could
Mm-hmm.
have made your week or whatever. You'll miss it. So that's what I try
Right.
to do is be kind of a noise filter. Partially, I do that through just practice over the years of trading news that I shouldn't have traded and losing money, and traded news that I should have traded and making money, and just like through experience, kind of figuring out, okay, if Netflix raises their prices, like that's big news, versus if this random biotech gets a patent, like that's not really big news. Like don't trade that. Um, so that's, I guess, like what I choose is important per se. Not that I'm, filtering out anything too much. I try to put everything in there and let people determine on their own. Um,
Mm-hmm.
so yeah, so reading everything from macro news, stock specific news, analyst research that gets posted. The two sources, actually, no, I wrote down three sources. I use a bunch of sources, but I guess the three that I think I should share, one is Twitter for sure. Twitter
Mm-hmm.
for speed, definitely for like breaking news headlines. Twitter is like the best. You can find anything on Twitter. Half the things almost get posted to Twitter first these days. Like in a way, it's a news reporter tweeting something, and then Bloomberg picks up the tweet, and then it's a Bloomberg headline, but like it's hitting Twitter first. So
Mm-hmm.
often it's on Twitter first, and if it's not on Twitter first, it's on there fast enough where I'm not an HFT. Like I don't care about 1 second or a half a second per se. It
Yeah.
can matter, but if the news is big enough, it's not going to matter that much. Um, so Twitter for speed, you can on Twitter on the search bar, you can search dollar sign, and then you can search a ticker. So I
Mm-hmm.
would always see like news come out, and then try to figure out who's posting that news first, and look for it and figure out if that's a good account and follow that account. So I've built up a good, like I have a solid follow now of just like people that post stuff.
Mm-hmm.
Most of them I'm sure people know about. Second resource would be Atom Finance, ATOM. It's really, really cheap. It's really good for stock specific news. It's not breaking fast, but it has about like all the headlines you need. And then you can also look up like fundamental research. You can, go read a company's balance sheet or income statement or something like that there.
Mm-hmm.
And it's super cheap. It's not one of these, $200, $300 a month subscriptions. So pretty much anyone can do it. I think it's like $5 or $10.
Nice.
And then the last one is Financial Juice, which is more macro news, and they have a paid one, but they also have a free one as well.
Okay.
Um, so those are three. Twitter is one that everyone knows, but those other two are ones that maybe you guys know, maybe you don't know about, but they're solid. I use them every day. So yeah.
Great. Awesome. All right. So now let's get to our audience Q&A. Anyone, again, just a reminder who is watching, please submit your questions in the chat. I will ask them to Patrick and he will answer them. So we have quite a few wrapped up here to start off with. But as we're talking, if anyone wants a follow up to your question you asked or a follow up to a question you're listening to being answered, please ask it. We'll get to it. All right. So our first question comes from Jonathan. And he asked, how do you reset your psychology when you have a losing trade or a losing day?
Yeah, good question. I just go back to the what I said before, that there's just infinite opportunities out there, and there's just always going to be more. And I mean, part of that you just know from doing it long enough, where
Mm-hmm.
you like I've been, you'll have slumps for a long time. I've had those 2 3 month slumps where I'm like, I feel like I, work hard and not stupid, but I just can't like figure this out. And
Mm-hmm.
then just you have that big up day eventually, and just things work out. So I mean, easier said than done. Like obviously you get down on yourself when you lose money, but honestly, like if you want to think about it in a funny way, just when you lose money, just think if I just did the opposite of what I did, I could have made all that money.
Yeah.
And that's what I mean. Like there's always opportunities. Like it's not like people are breaking into your computer and taking your money. Like the market's moving, you were on the wrong side of the movement, but it's moving. So
Right.
just get back after it tomorrow. If you are not in a good mental state, then don't get back after it. Don't be aggressive and try to make all the money back. Just
Hmm.
look for the next. Don't like focus on that opportunity. Just go to the next one.
Right.
Just go to the next one. So
Yeah.
yeah.
Great. Great points there. Our next question comes from Charlie, and he asked if your strategy implements any supply and demand, or what is your opinion on creating a strategy on supply and demand? He says he's been studying it more heavily in these last few months.
Yeah, my strategy, well, that's like a big question. My strategy does depend on it. Supply and demand is everything, really.
Right.
We joke about it in the pro desk all the time. People, the market will be going, like last Friday, market's going up, and people are like, why is the market going up so much? And we're saying, well, more buyers than sellers, right? Why is the market going
Right.
down? More sellers than buyers. Um,
Mm-hmm.
as far as creating a strategy around that, I mean, I don't know exactly how you would do like a perfect cutthroat, like black and white strategy around it. But when we talk about positioning and sentiment, that really ties into that supply and demand. So
Mm-hmm.
if, positioning, obviously, if everyone's loaded up all along, there's not going to be too much buyers left and vice versa, which we've been seeing the opposite side of that actually more recently, which is people don't have enough longs on. Like the market might, market doesn't look good, might try to break down, but there's not that many longs on and there's a lot of shorts on. So
Mm-hmm.
supply and demand, there's not that many sellers. So there's buyers to be found. There's also, from shorts getting squeezed, there's buyers to be found from people that need to buy because they're just not long. And that creates the short squeeze supply and demand aspect.
Right.
So yeah, supply and demand is huge. Positioning sentiment is huge for sure. There's a lot of
Mm-hmm.
ways to look at that. You can look at put to call ratios. There's a lot of ways to look at that.
Yeah.
But yeah,
I
supply and
think it'd
demand is
be fair. I think it'd be fair to say that supply and demand is a piece of most, if not all, trading strategies that people rely on.
for sure, definitely. Yeah.
Yeah, definitely. All right, our next question comes from Evan, and he asked your opinion on the oil market. Where do you see the oil market in the next 6 to 9 months? And do you have any thoughts on silver and gold?
Yeah. Oil. I don't trade oil too much. I
Mm-hmm.
think oil is going to be similar to the market in that it's probably going to be rangy. There's a good chance. And I mean, so if we go into like a bad recession, I guess that's going to be bad for oil.
Mm-hmm.
But now you have this OPEC news that just happened over the
Yeah,
weekend that
that was
they're like,
OPEC's whole fear, and that's why
right,
they did
right.
this
So they're putting
surprise
in,
cut.
that's
Yeah.
another example of like, oh, something might break. So someone steps in and puts a floor in it and
Mm-hmm.
it doesn't really break. But
Yeah.
then oil rising higher isn't necessarily good for inflation per se. It's
Nope.
not going to ruin it either, but it's not really good for it.
Mm-hmm.
So oil, 6 to 9 months. Let me look at the oil chart right now. I'm curious. Probably not. I don't know. I could see oil not making a new high. I don't think oil is going above the 2022 high,
Yeah.
um, but
Well,
I
because
don't
you got
know.
to think that
It's
2022
just really
high,
rangy. Yeah.
you got to think about it in the backdrop of why that 2022 high happened. It wasn't just low demand, but it was also or low supply, but it was also really high demand. And if you think we're going into a
Right.
recession in Q3, oil demand would be lower, even if the supply is lower, and then you might have a more in line supply demand picture for the oil
Right.
market.
So you could like, yeah. So you could. That's a good point. But then, so you could think also, oh, we're going into a recession, so oil should be going lower. But then you look at like these energy companies, Oxy, Warren Buffett basically is going to buy out Oxy under 60 every time it goes under 60 into the mid 50s.
Mm-hmm.
Warren Buffett just buys it. Chevron just announced in the past couple months like a top five buyback in history, like $125 billion buyback. So how low is are these energy companies really going to go? maybe not so much lower, but how high are
Mm-hmm.
they going to go? Maybe not so much higher. So you get
Mm-hmm.
this choppy, kind of neutralness where you can catch
Yeah.
up moves, you can catch down moves, but in terms of buying oil right here and being up or down in 6 to 9 months, I could see you being up, down, or flat, honestly.
Yeah.
Silver and gold.
Okay.
So gold they've both been running partially, I guess, on recession fears too.
Mm-hmm.
I've been eyeing silver, and I was eyeing it before it broke down recently, and then I missed this V bottom. It totally V bottom back up. They both honestly look really good, and if you really scroll out in a big picture, gold has a pretty bullish, like 10 to 12, 15-year chart.
Mm-hmm.
So they look good. I think they look good. The trend is your friend. Keep riding that trend. They've had big moves, so they can come back down. So I would like trail that if you're trailing it at all or anything. But I think they look good, and they could see higher. Um, yeah,
Yeah.
I don't.
And
I
these are
personally
those.
don't trade the metals too much, but I do
Mm-hmm.
watch them. So yeah.
And like anyone or like most would say, those safety assets are where you want to be in a time of a recession.
Right, sure.
Um,
Especially if the dollar starts to weaken out as well. That
yeah,
helps that.
we're having some concerns about that as well. All right, our next question comes from Eric, and he asked, "What is your favorite setup to trade? For example, what's the ideal combination of things that you like to see when you enter what you would consider an A plus setup?"
Yeah, good question. Off the top of my head, I would say my ideal setup is extreme extension on an intraday time frame into a real important daily level. So, what I mean by that is when I say extension, I'm talking about the space between where the stock is trading and pick your favorite moving average. It doesn't really matter per se. We use the 8 EMA and the 21 EMA. I use the 8
Mm-hmm.
EMA on multiple time frames. So when it's far away from that, like downside extended, but then into a daily support level, that's where I find the stars align. Where
Okay.
it's very likely that it's going to bounce on the intraday because of the extension, and it's also likely that it's going to bounce on the daily because of support. Um, it's selling off for whatever reason. Everyone wants, it's looking terrible. Oh my gosh, it's never going to bounce or whatever, and everyone's getting scared, and that's usually a good time to buy. Um, and the name too. So if it's a quality name as well. So like
Mm-hmm.
today, that actually happened a bit with Apple today. Just look at the low in Apple today. Apple was downside extended today, intraday, but it was just coming into like nice daily levels and a nice daily uptrend. And Apple actually ended up bouncing pretty well today. So yeah, down like basically fear in quality, I guess, buying fear in quality. Yeah, that makes sense.
All right. As we continue to go through these audience questions for our viewers, just a reminder to submit your questions soon so we can get to them before the end of this event around 6 p.m. Eastern. So just get those questions in so we can make sure Patrick is talking about what you guys want to be learning about. Our next question comes from Jose, and this is more of a T3 trading group centered question. Also, a little bit of your opinion, though. He said, "What do you think about pair neutral market trading? Do you apply this strategy? Do you use Python or AI algorithms? And does T3 provide you with some kind of software to implement pair trading?"
Um, T3 definitely can help you with that and help implement
Okay.
that. So
Okay.
definitely contact us. I
Mm-hmm.
personally have never done pair trading.
Mm-hmm.
I know, I when I think of that, I think of buying Coca-Cola and shorting Pepsi. Like, I don't know if that's what you're talking about, something like that. But I can't offer you too much more just because I've never done it. So I'm not going to give you trading advice on something that I don't trade with.
Yeah.
But definitely contact us. We do have people that do it. I don't use, I don't have a black box that I code with, but we have plenty of people at T3 that do. So definitely reach out if that's something you want to do for sure.
Okay, cool. All right. So just to preface this question, a reminder for everyone that part of the Credit Suisse collapse and rescue and all of that was all centered around the credit swaps. happening at that bank. And so our question from Ariz is focused on that. He said, what is your opinion on the credit swap market?
So one graph I look at that's pretty good. It comes from another resource is a sentiment trader. Those
Mm-hmm.
guys are awesome with they just come up with like these fantastic statistical graphs based on a ton of data. Again, like put to call ratios or credit default swaps or stuff like that. And then they'll compare it. They'll take that data, put it on a chart, and compare it to the market, and you can often find correlations. So one chart that I like to share from them that we've been looking at since the start of the bear market has been the S&P compared to just overall credit default swap activity.
Mm-hmm.
Um, and overall, I mean, so if you're asking my opinion on it for like the overall market, overall, it looks like that's calmed down a bit. That's not
Mm-hmm.
really like that'd be something that would lead to the market, meaning if that would uptick probably before the market downticks, right? Like bonds are canary in the coal mine, old saying. Um,
Mm-hmm.
so right now that looks, I mean, it looks like a lot of things where it's off highs and it's calmed down, but it's not in a clear downtrend or at lows where everything's just perfect and it's rainbows everywhere.
Mm-hmm.
And then I know there's been pop-ups of fears elsewhere at like Deutsche Bank. I think they were having
Yep.
problems in their market last Friday, and then
Mm-hmm.
obviously UBS as well. So it's something I pay attention to. I'm not looking that up for every single stock that I trade or anything, but
Mm-hmm.
overall, again, that looks like it's calmed down, but people are still ready for something bad. Like people are hedged up, I guess. It's
Right.
calmed down. The worries aren't there, but people still think something might happen, maybe. So
Yeah. It's almost like you can look at those types of markets as where you can find the pockets and signs of fear in the
right,
market and what might be
for sure,
happening with the economy overall as well.
for sure.
All right, our next question comes from David. He asked, and we've been talking a lot about rate hikes, right? But he asked, do you think the market is too focused on rate hikes and not concerned enough about the tightening of the balance sheet via the offloading of US Treasuries from a world record buy up during COVID? So just a reminder for everyone that the Fed has lots of tools to lower inflation. One of those being rate hikes, but one of those also being the uh, tightening of their balance sheet over time.
Yeah, that's a great question. I the Fed, from what I've seen, the Fed can do a pretty good job with tapering off that balance sheet without hitting the market too hard. And going
Mm-hmm.
back to the December 2018 example where the market went straight down December and the Fed needed to cut and everything, I remember then post that in like February, I guess would be 2019, February, March, April, May, that whole spring, the Fed had cut rates, but they were still lowering their balance sheet. And I remember that was one of the first ever like real V bottoms. We V bottomed that December 8, 2018 and went to new highs by I think like September or something. And I remember bears all throughout that spring arguing that we were going to retest that December low. And one of their big reasons was that the Fed was still lowering their balance sheet. The balance sheet was still coming down, still coming down. So I'm not too concerned about the balance sheet right now. I don't think you should be either, especially on like a day-to-day basis or anything.
Yeah.
Um, but yeah, the market, I don't know. Again, it's back to the situation where we're pricing in rate cuts. The market is trading like we're gonna get those rate cuts, and it just I don't see how that's happening with where inflation's at, and what the Fed is like. The Fed is saying one thing, the market's pricing in another. So yeah, but for the balance sheet, I would just use. I specifically remember that when the market V bottomed and the balance sheet was still coming down.
Mm-hmm.
So we'll see, but I'm not too worried about the balance sheet for now. Yeah.
Okay, cool. We're coming up on our last few questions here, everyone. So if you have a question to get in for Patrick, now is the time to submit it so I can make sure to ask it. Eric, first of all, gave you and Derek some props. He said, between you and Derek, you two are very knowledgeable about various market aspects, indices, and technical analysis. So taking it way back to the beginning, when you were just getting started, what did you do to enhance your stock market knowledge? What do you continue to do as well? And did that come from books, YouTube, online sources, etc.?
Yeah, good question. A lot of it, I would say, a lot of it came from T3. So obviously to give T3 a shout out, but what I mean by that too is you most people that are good at things learn from someone, right? Like they have
Right.
mentors. And most people that are really good at something aren't out there on the street offering to teach people for free, because they're bored or whatever. So I would try, like, T3 was a good home because there's a lot of great professional traders at T3. And then within T3, Derek was a big help, obviously. And I was able to
Mm-hmm.
find people like Derek and others like him who were kind of more veterans and had been there a bit longer. And just figuring out kind of who was smart and then who was trying to sound like they were smart, but not really actually moving money or not actually making money,
Mm-hmm.
or just saying one thing but then the next day contradicting themselves or whatever, and just kind of figuring out like who really is a veteran and really knows what they're talking about, and then just listening to them, following them, but then also comparing what they're doing and thinking to my own thoughts, because you still, like, at the end of the day, you're still your own trader. You still have to push your own button and make your own decision.
Yeah.
And I'm not a fan of following traders, because I used to do that. Everyone does that. But I'd always tell myself, like, if I actually want to be a pro trader, what happens when in 20 years, when this guy is like an old man and retired and, I'm in my prime, like, I can't just follow someone. Like, I'm going to have to do this on my own, make these decisions on my own without any help one
Mm-hmm.
day. I got to figure out how to do that. So, learning from veterans and learning from the people that know what they're talking about, and then also coming up with your own theories and ideas, and, trying to, say, okay, I was wrong to think this here. And, this guy was thinking this here. And, oh, I was actually right to think this here. And, kind of like mixing that. So
Mm-hmm.
fine, you got to do it on your own, but definitely try and find some help too, especially in the beginning. You definitely need some help. Um, Definitely not books. Everything I do here, I learned a lot in college, but I'm not doing too much of it in the market, in terms of like studying finance and everything. I did study
Mm-hmm.
finance. So yeah, just try and find people that know what they're doing, to help you a bit, and
Yeah,
yeah, walk you through that process. Yeah,
for sure.
for sure.
Great. All right. And then Ryan asked, what are your superstitious daily habits related to trading? Like you finish coffee by 9:15, or you take a walk at 11, whatever you do to keep your background life set up for the best trading results.
Yeah, good question. I mean, I guess I do like the same stuff every morning. I drink iced coffee every morning instead of hot coffee, but that's not a superstition.
Okay.
I'm not really a superstitious person. I don't really believe in it as much
Mm-hmm.
as I've seen many coincidences over life, and I'm not really a superstitious person.
Mm-hmm.
Because that's just like setting yourself up to be in a bad mental state one day. Like, I don't
Yeah.
know, just everything could be perfect, and then whatever, like, just one little thing is off and that messes up everything, and now the market's against you because you didn't shut the light switch 3 times or something. Like, I don't know.
Yeah.
So I just not really a believer in that, and don't really
Mm-hmm.
do anything that's superstitious, because the market doesn't care about your superstitions. So why should you, I guess.
True, true.
Yeah.
So you're not a superstitious person, but I guess like most traders, you definitely have a daily routine. Take me through kind of like the bird's eye view of your daily routine when you're getting ready for the market, when you're in the market, and then after the close as well.
Yeah, sure. So again, wake up, pretty much roll out of my bed onto the computer and say good morning to the VTF. Um,
How early
well,
are you waking up?
actually, no, it depends what time, actually, now that I think about it. So I'll get out of bed, take care of whatever, like I'll have some emails that I have to take care of from overnight,
Mm-hmm.
either from yesterday or that came over overnight or that came earlier in that morning. Like, try to take
Mm-hmm.
care of whatever I kind of have to take care of before I can really start focusing on the market. Then I'll say good morning to the VTF and then start doing like, really just focusing on the research. So
Yeah.
say good morning and then read more and read more, just all the headlines, everything. Again, I give you those sources like Adam Finance, Financial Juice. I read like everything on there every single morning, and then I'm posting that all throughout the VTF. Then I write my morning note, which is again more of it's kind of a more broader macro overview, but then also talks about what I think the S&P is going to do that day, technically speaking, and then game planning what I want to trade that day, game planning what I want for the morning meeting. So that's about anywhere from like 6:37 ish in the morning. I'm usually getting into the VTF by 7:30, 7 to 7:30. I'm getting in the VTF usually. Um, and then research pretty much 7:30 to 9:30. We do our morning meeting at 9, and then markets open at 9:30. 9:30, I'm watching option flow. I'm watching everything, news flow,
Yeah.
stocks, like everything. My eyes are all over the place. I honestly,
Hmm.
it's a lot. I'm pretty good at multitasking, I guess.
Yeah.
And then usually, so Derek's on the radio till like 10:30 ish. I'll get on the radio after him. I'm on the radio till like 12 ish. Then things usually slow down in the middle of the day. I'll have to do some other stuff, whether it's helping a trader that needs help with something or whatever. Other T3 admin stuff, I guess. Then I'll get on the radio at 3:30 ish into the close for the VTF, and then 4 we do our afternoon meeting. Derek's doing that. I'm helping with that sometimes. Or, again, just emailing and then just reviewing. I think I said last time I don't really journal anymore per se. It's just all in my head.
Hmm.
Because I feel like when you're journaling and like writing things, you you might be too focused on writing your journal and you're not really I'm trying to really focus on like putting myself back to that moment. If I'm journaling and reviewing a trade, like you got to put yourself in that moment in time for when the market was moving. Like it's so easy to look at a chart and be like, oh, I should have bought there.
Uh-huh.
But then look back and say, why didn't I buy there, and think like, oh, because I was scared because it was going straight down. Well, then learn that, so then next time you're scared and something's going straight down into a good daily support level, be like, this is that feeling I felt last time where it's at a level I know I should buy, but I didn't want to buy because I was scared and it worked out. And it's almost like you
Hmm.
like use that gut feeling to to your advantage in a way,
Yeah.
if that makes sense. So
Yeah, totally. All right, Pat, our last question here is going to come from me. And I know personally that this is, you love the stock market, you love markets, you love stocks, you have a legitimate, true passion for this, and that's why you do it every day. But explain to me where that passion came from. What made you fall in love with stock markets? What made you want to do this for the rest of your life?
good question. It all didn't really come from anywhere. As a kid, I grew up to my dad used to watch like Kramer on CNBC, and that was like pretty entertaining when I was really small. This guy's like shouting
Yeah.
on TV and colors are
Yep.
moving and stuff, and money, money, money. Then so I was always kind of interested in it, but I feel like everyone's a little bit interested in it, obviously.
Mm-hmm.
Then just growing up, I'm trying to figure out what I want to do in life and everything. And I went to school and I studied finance and accounting, and I minored in computers, and I knew I wanted to do something with either finance or accounting, and I knew coding was really important too, so I did a little bit of computers. And I thought I was going to want to, so then like throughout that I was starting to uh, dabble a little bit in Robinhood, trading a little bit here and there. And throughout that, I started to figure out like this is really a place where you can scale up and make infinite money, if you will. And it's not necessarily about the money, it's more just about, well, one, if you can make infinite money, then like, why wouldn't I? Why, if I can go make a bunch of money and
Mm-hmm.
donate to, some cancer fund or something, like, why wouldn't I? Better me than someone else who wants to make a bunch of money and buy a yacht or something like that. So like
Mm-hmm.
it seemed like a really good way to raise money and capital. Then so I always figured I would like use it as a way to kind of raise capital on the side while I worked. And then throughout college did internships for, accounting and stuff like that, and quickly figured out that as much as I love math, I'm not going to sit in a cubicle and do accounting on Excel every day. It's just
Mm-hmm.
I don't know, maybe like in the future I could do that if I really have to, but I would rather take a leap of faith now than do something I'm not happy with.
Yeah.
So yeah, then the opportunity at T3 came up, and yeah, it definitely has worked out since then. But yeah, it's
Mm-hmm.
really it's again, it's not like about money per se. It's more just about one, freedom, and two, scale. I think scalability is the big thing. Like I could, you can make scalability and availability. That rhymes.
Mm-hmm.
Like I could make a bunch of money being a major league baseball player, but that's a lot harder to do. Whereas I could just
Yeah.
sit here in a chair and click the keys. Like anyone can kind of do that. I mean, you got to learn this stuff obviously, but anyone can learn.
Mm-hmm.
And then even again, so like you can make a lot of money doing certain stuff, but it's a lot of it can be very select, or you have to be extremely good at it. I feel like anyone can learn this if they work hard enough. And again, it's just discipline. I feel like I'm a pretty good self-disciplined person. So yeah, it just comes from, again, availability, scalability, and I feel like I can do it. So I will regret not trying. So I might as well try.
Yeah.
Yeah.
Totally. All right. For everyone joining us, I am posting a link right now in the chat. That is the link to our next live event. These are now every single week instead of every other week. So next Wednesday, April 12th, Scott Redler will be joining me again for his second edition of Conversations with a Pro Trader. Scott has been a pro trader with T3 Trading Group for many, many years. He is also the leader of another VTF at T3 Live. But thank you so much, Patrick, for joining me. Again, a reminder for everyone, he is a moderator inside the Pro Desk VTF alongside Derek Oldensmith, who was with us last week. And Patrick will be back in the future as well, probably in about a month from now. So everyone keep your eyes out for that, and hope you join us then. Thanks again, Patrick, for joining us today.
Cool. Thank you. Thank you.